Welcome to Growing Empires. I'm Jennifer DeJesus, real estate investor and operator. This show takes you behind the scenes of how real estate assets are executed, managed, and positioned for long-term performance. Let's get into it.
All right, here we are again, Jen. I am loving this series on getting to know you and your journey growing your empire. Where we just left off in the last episode, you were talking about the changes in the real estate industry and investing and all that, which was really good to kind of insert where we did. And then prior to that, you had talked all about your businesses and how they came into being. So why don't we start there? Just kind of ground us in like, okay, so this is where I'm at. This is where I have my businesses, and just take it from there, because I really am curious about how you evolved into syndications and doing these larger deals, which continue to grow.
2015 is when Empire Property Management went independent. That's when I formed Empire Property Management. I think I had mentioned in the previous episode, I created another management company for a different broker, and then we parted ways and I started Empire on my own. I formed Steel City Realty in 2017. Steel Abstract, the title company, was 2018. And then the construction company was 2019. Don't ask me why everything is a year apart. I guess that's when I get antsy again for something new.
Or you get mad, right? Because remember, it was about, I just got mad because I couldn't get service, so I just built my own.
Yeah, no, it really was about the evolution. So over the years of us serving clients, I just kept paying really close attention to their experiences, what they were saying, their feedback they were giving. And it just became really abundantly clear that I needed to be the holder of all of the services. I needed to, from end to end of the transaction, from end to end of life cycle, I needed to control everything from the destiny to the direction to the, so that I could control the outcome. And that is where I can then say we achieved exceptional service, exponential service, because we were able to control everything end to end. So all of these different entities were, again, not necessarily anything about me wanting to own a million businesses at all. It was really about making sure that I could consistently deliver results to our owners, to our investor pool, and just continue to, level up, every single time. And then 2020 was the formulation of the Empire Capital Fund. And that was the pivotal point of kind of a new journey in real estate, if you will.
So how did that come about? Because I know that you are a voracious learner, and attending seminars, reading books, talking to people. It was just, okay, how does this work? How do I make this function, and how can this be a complement to the business that I'm already creating? Talk about that. Like, what made you first hear about it? Because I'm sure it was well before 2020 that you were aware of all the clients that you had and the customers that you had who had investment properties. And so there was this kind of undercurrent of investing in real estate that was really the heart and soul of everything that you were doing. And the bulk of your customer engagements was how to provide them the service they needed for their investment products.
Yeah, very true. So, just like I mentioned that I had listened to them, I was an avid listener of feedback that I was giving. I was also an avid educator of myself and in my career and my focus, but I paid very close attention to market dynamics and things that I knew would impact their investments. So economic shifts, demographic shifts, you name it, I was paying very close attention. The population of people, how many jobs were available, what the jobs were that were serving our tenants. I mean, I paid very close attention to every single detail, because all of these things somehow come back to and impact the bottom line for an investor. And what was happening around 2019, let's just say, in our market, we were starting to see kind of the writing on the wall. And I definitely pride myself of being two steps ahead, if not 10 steps ahead of everything that's happening in the industry for the people that we represent and for the people that count on me to kind of know what's happening. I don't wait till we have a recession or wait till we have a market shift and be like, oh man, this sucks. Like I pride myself on making sure that I'm in advance of everything that could potentially impact their investments. So we were watching very closely some things that were happening in our marketplace. And being in Pennsylvania, on the eastern side of Pennsylvania, you would not believe the amount of money that comes in buckets and bags full, like, armored trucks driving in from investors that were investing in New York, New Jersey, kind of up and down the eastern seaboard, and they are moving their money in droves into Pennsylvania. And that was happening, 2018, 2019, and it accelerated because of rent control that was passed a year or two before that in New York City. So the minute rent control was a thing in New York City, and it started to have negative impacts on investment portfolios, we started to see a much higher influx of money coming into our market. Now, most people would think, well, that's great, you got new clients, and in theory that is accurate, it's correct. But what it means for the people that are local is that they have competition. So our investors that were already here, already investing, are now starting to experience prices of properties going up. They're starting to, experience multiple bid situations where the prices of properties are being bid up. It's becoming much harder to find a good solid deal because now you have these extra market significance. You have this extra market activity that's now inflating prices and driving the results of the profitability and driving the results of the actual prices of properties. So my answer to that was a hedge fund. And the reason I went that route after some, again, very deep research and talking to market experts is that going back to that kind of control factor, I needed to control the avenue in which investors could continue to invest, because what was happening in the broader market was not something in my control. I can't control rent control in New York City. I can't control how much money was coming into the Pennsylvania market, and I can't control how many investors were actively seeking properties at the time. So as I started to realize that our client base, the people that I want to protect, are going to be in high competition, and high competition is never good for an investor trying to get a good deal, I knew that I had to be resourceful. And there was really two paths: figure it out, lose the business. And I wouldn't lose the business. I wouldn't lose their trust. And these are people that really felt comfortable in this market and they wanted to continue to invest. They didn't just want to buy a property and then have to move to another market. So for me, it was about, to me, it was like a requirement. I was required to figure out a solution. So after a lot of research, after a lot of education and talking to market experts and looking in different markets where the patterns were similar, I came across, what I believe was the answer to that, and it was a hedge fund. And why I picked a hedge fund versus a syndication, because in theory they are very different. I picked a hedge fund because, number one, I wanted to pull money and I wanted to pull it in mass quantities. And then what I wanted to do was leverage my expertise, leverage my network, and source primarily off market deals. So, what I was basically saying to investors is, don't worry about what the market's doing. That doesn't mean you can't invest. I'm going to now source the deals privately. I'm going to source them bank to bank. I'm going to source them direct to seller. We did everything that you can think of. We did to source deals. And I could talk about that in a minute if you want me to go a little bit more detail. But my primary objective was to source a different type of property for our investors to allow them to continually invest. And the hedge fund allowed me to do it for everybody. Because if I was trying to source just off market deals for the typical investor, how do I pick who gets the deal? Like, it's almost impossible. And you wouldn't believe how many phone calls I get too. Oh, send me your off markets, send me your off markets. And I just think to myself, you and 1,000 other investors asked me that today. Like, how do you pick that? But in the fund, I could say, listen, you invest in the fund and I will give you exclusive access to off market opportunities. And I go even a step further in the fund, which is obviously they're investing their money in the fund. So they pull their money together. I take that money, I go buy these off market properties that meet our criteria, our investment criteria. But if for some reason I don't buy the property that I've sourced off market, and that could happen for a variety of reasons. I can't strike a deal that's adequate for the fund. Maybe it was timing issue. Maybe I have too many deals going on at the same time. Maybe it was a cash flow or a capital constraint at that time. So there could be many reasons why I would source a deal and then not buy it, but it still be a good deal or a good opportunity. So what I decided I was going to do is, for every property that the fund sourced that was off market, direct to us or direct to seller, that I was going to then turn those opportunities over to our exclusive list of fund investors so that they could take advantage of them independently of the hedge fund for anything that the fund didn't buy. And we've been successfully giving our clients, our investors, some of those opportunities as well. But for me, the fund was strictly about answering the market dynamics. And instead of just telling investors they had to wait to invest or wait till the market caught up or invest in another location, I was able to figure out a way where they can continue to invest, kind of wait out the market dynamics, wait till the market shifts again because it's cyclical, cyclical, it'll shift again, and give them opportunities that they wouldn't otherwise have.
I don't think I ever put two and two together in how I've been working with you as far as understanding that model. And I don't think I ever knew that, it's kind of like you had, okay, these are off market deals, but the first group you offer them to are the people that are investing in the fund and they can run with it. And I don't think I ever knew that you did that. And that's actually pretty cool. To me, that's like another reason why someone would choose you to, pour their investment dollars in. I think that that's one of the many hidden talents you have as far as identifying where you can best bring the value to your customers and your clients. I would like you to talk a little bit about sourcing the deals, if you don't mind, because that piqued my interest for sure. So talk about sourcing those deals and how it was different in that you were doing it for the hedge fund.
Sourcing off market deals is not by any means a one trick pony. There's multiple ways that you can get off market deals, and they come in all different shapes and sizes. But it's really about relationship building. It's not like you just call up a seller that, has a for sale by owner sale, sign out there and say, hey, I want to buy your property. It's not that simple. And there are investors out there that do mailers and cold calls and all kinds of marketing activities. But part of what I've been able to create over a decade and a half in the business is a network of people that call me first. So let me just start there and say that on a regular basis, almost every day, but easily weekly, I get phone calls from other brokers, other agents telling me about properties that are about to hit the market because they know that I have an endless source of investors looking to acquire properties. And many of our investors have been able to capitalize on that, and properties never hit the market because we can strike a deal before it happens. So broker to broker, broker to agent connection is huge. And that's been a good source of continued opportunities prior to things hitting the market. But for the fund, we actually source properties in many different levels in different ways. So our very first property in the fund was sourced direct to seller. And what I mean by that is I actually had a seller who called me with a handful of properties. They were being managed by another company. They were losing their shirt and they called me as like a rescue mission. So out of the portfolio of properties, some of them we took into management and we helped them get back under, get their feet under them and get the properties up to code. And, years later, we actually sold all the properties for a huge profit. But there was a few properties that were impossible for them to fix. And it was because they didn't have capital. So because they had unfortunately had such a bad experience with management, they were very cash constrained. And one of the properties in particular had a very extensive, what they call CO list, an inspection list from the city that says you got to fix all these things. And I mean, it was exhaustive. The list was very long and very expensive. And had they not fixed that list, they would have condemned the building. So they were being met with, I'm going to condemn your building. You'll never make any money. And they don't have any money to spend to keep it from being condemned. And oh, by the way, none of the three tenants were paying rent. So it was like a snowball of just problems for this owner. And after I got all the other ones that they had kind of, smooth sailing and getting them kind of ticking in the direction, I said to him, I said, listen, I don't have a magic potion for this particular one because it will require capital and I can't just make that appear for you. But what I can do is take it off your hands. What I can do is remove you from the stress of this property. So we worked out a deal that was by far below market where I took the property, they no longer had the risk, they no longer had the headaches, and they didn't have to spend any money. And they actually made a little money on it because we paid what the property was worth in its current condition, given all the things that I told you. So that was direct to seller. That was somebody in a very distressed situation that didn't have an avenue that was going to turn positive. So instead of them just letting it go to foreclosure, I bought the property from them, got them out of that sticky situation, and it allowed them to just allow the rest of their portfolio to kind of shine until they got to the point where they sold it. That was the first property. The second property was an estate. So if you think of people passing on, there's estate attorneys involved in that. So because I have a deep network of estate attorneys, I frequently get phone calls from attorneys saying, the family doesn't want this property, but they need to sell this property to conclude the estate. So they'll call me and ask me to sell the property. That was the second property we bought. So instead of putting it on the market, I bought it direct from the estate. Another great off-market source. The third one we bought was a foreclosure property. That was direct to bank. And again, these are just all connections that you form, but those are some of the more typical ways that we find properties. So direct to seller, direct to broker, estate sales, and then foreclosures. And then there's other avenues as well, which is, marketing efforts and stuff like that, or sheriff sales, those sorts of things. And then sometimes we can also go direct to bank. Like once a sheriff sale is completed and the bank takes the property back into possession, we can get a hold of those assets prior to them being released to the public. And then the last but not least that has been a source of opportunity for us is every municipality, at least in this area, has what they call a blighted list. So it's where the city owns properties that have been blighted, they've been condemned, they could have been taken back by tax sale, they could have been just left go. I mean, they can't land on this blighted list for a million different reasons. But because I own a construction company and because our reputation is that we can go in and rehab just about anything, I was able as a contractor to get on that list. So as the towns are putting properties on these blighted lists, we're able to go in and bid on the properties to get them from the town, essentially take it off the town's books, because their goal is to have them rehabbed and put back into the market, not just sitting there blighted and causing chaos in the neighborhood. So we've gotten properties that way as well. And then a little bit more of a creative solution that I've done before is, and I've actually gotten land for myself this way, is what they call repository sales. So same type of thing as a foreclosure. A repository sale is when they take back the property for taxes, specifically taxes. And now the tax authority actually owns the property. So you can go into most counties and do what they call a repository sale purchase or a bid. And as long as you're the winning bidder, you can get properties. So I owned in the past, I don't own these properties anymore, but I owned 6 or 7 contiguous parcels. And in the center of that parcel was one more parcel that I didn't own. And it was on a repository sale. So my ability to get that property was, it cost me, by the way, $2,000. So how crazy is that? So $2,000 for this parcel of land that now gave me 8 contiguous parcels. And now I was able to subdivide that land and develop on it. So types of, very creative avenues. Some of them take a lot more time than others, but those are just some of the examples of how we source off market deals. And I should mention that one of the reasons I can't open this up to just every investor that asks me for it, you can imagine how long it takes to actually create these relationships or create this image or this belief in the town and different banks and different things that you can actually do something with it. You're going to do something good. So, but that's how we've been sourcing the properties.
It sounds like you're probably on a lot of people's speed dial.
Well, I
You've got
definitely
your
get phone calls every single day with somebody saying to me, can you just send me off markets? And I chuckle and then I nicely, very professionally say, the only people that get my off markets are our exclusive database of fund investors, because that's the truth. It's nobody else is getting our off markets. You have to be invested in our fund for you to have that exclusive opportunity, because it takes way too long to source those deals. We need to make sure that we are giving our exclusive client base those opportunities.
And thank you for going through that. I learned more stuff. I just love doing these with you because I'm learning all kind of good things about how you approach your business. And when you're looking at this hedge fund, okay, so the Empire Capital Fund is a hedge fund, correct? And that was
Correct.
your first fund. And
Yep.
is that fund still open?
That fund is still open. It's doing very
Okay,
well.
good. So if you're
Doing very, very
listening
well.
and you want to take advantage of a nice opportunity, you need to call Jen.
Yep, absolutely.
But that's just the beginning. So what I'd like
Yeah.
to hear you talk about is how since obviously you have figured out this model of the hedge fund and getting these investors and doing these off-market deals and just really coming up with some very creative solutions, but you also are learning much more about expanding the types of funds that you're working with and the people that you're working with. So, and this is more in your recent, which is why we're kind of shifting gears and elevating the content that you're producing and this show here and the way you're educating and bringing more value to your investors and your Empire Investment Club subscribers. So talk more about some of these other models that you're entering into as general manager, as different type of operator responsibilities in these actual funds.
So now it's spawned into not only hedge fund, but now it's syndications and joint ventures. The major difference between those is just the size of the property and how many people are involved, typically. Okay. In a fund, we are pulling together money to purchase multiple properties. So in the fund now, I think there's 8 properties off the top of my head, and they're all doing exceptionally well. But in a syndication, you're typically buying one larger property. So in theory, a fund could easily be much larger than a syndication, typically, because one asset versus multiple assets. So generally speaking, funds are, tens of millions of dollars, whereas a syndication could be 5 million, 6 million, 10 million. It's hard to say depending on what you're looking for. But we started doing both funds, syndications, and joint ventures just based on the amount of people and the types of assets we were investing in. Some of our syndications are actually smaller multifamilies right now. We've got a 17 unit and a 6 unit, and then we've got 2 4 units. So we've done all kinds of things. We're syndicating industrial flex space. We've syndicated larger complexes. So our syndications are really about one asset, one type of investment, and to some people that speaks to them differently. They're more comfortable with, I call it see it, feel it, touch it. So in a syndication, you know what you're investing in before you invest. In a fund, it's blind. So in a fund, you give me your money and then I take your money and I invest it, but you don't necessarily know what I'm investing in until I invest it, because I don't even know. I have to raise the money before I go invest it. In a syndication, it's directly the opposite. So in a syndication, I've identified the property, I'm under contract on the property, and now I'm opening it up to investors to say, hey, this is the asset we're going to purchase. Do you want in on this? And then they can see it, feel it, touch it, and know what type of investment they're getting into. And joint ventures are really just about smaller pools of people. Typically, joint ventures have everybody that's in it is a working member, a general partner. Whereas in syndications in the hedge fund, there's the people that control the deal and operate the deal, and then there's people that invest silently. So your GPs and your LPs. In a joint venture, typically everybody is actively involved and is wearing some sort of hat. I'm doing a joint venture now that is for a ground up construction project. And one of the members is a developer, I'm the operator, and the other person is the finance guy. We all have a very distinct role in that particular joint venture.
And I like the variety. And I like how you explained it too. See it, smell it, taste it, touch it kind of thing, because that's true. You are trusting, and that's where your relationships come in so handy, because building that trust has to happen beforehand if you're looking at a hedge fund, because you haven't acquired the properties yet. So they're basically investing in you. And you've been successful because you have this amazing track record, which is why we're doing this series of conversations, because I want people to know where you've come from and why you're so good at what you do and what you care about. I think it's so important. I'd like to go ahead and pause this for now because I wanted to topically talk about this, but we're going to talk more about these larger deals that you're doing now in the next episode, as well as your management style. What have you learned about leadership and managing people? Because you have a lot of businesses and you have a lot of clients, you have a lot of investors, and you have a lot of partners. So I think it'd be really good for us to talk about your style. And I think that it's going to be an interesting conversation. So let's put a pin in it for now. And thanks for this little nugget of fun.
You got it. Thanks, Terry. That's it for now. If passive income from real estate investments plays a role in your long-term investment strategy, this show is for you. Thanks for listening. And for more in-depth resources, please head over to growingempires.com.